Hi and welcome to Penser Bank and our Analyst presentation Introduction to Compounders. My name is Markus Almerud and I'm an analyst here at the bank. So we're here today to talk about compounders, the cluster of acquisition-driven decentralized companies that are listed on Stockholm Stock Exchange. Here we see companies like Indutrade, Lagercrantz, Adtech, Lifco, Instalco, among others. So why now? Well, in aggregate, the shares have derated 45% since the peak late last year, while the earnings trend have continued to rise steadily throughout this period, and valuation are now back to historical averages. So in this presentation, we'll start by explaining what a compounder is, then we'll discuss the earnings drivers, followed by the earnings trends and valuation. And with this as a background, we can later come back to the individual companies. So what do we mean with a compounder? Well, it's a group of decentralized run companies that make acquisitions that usually continue to be run independently and often with the same owners. So in a way, the compounders themselves can be described as large holding companies with a large number of independently run subsidiaries. Each acquisition is usually relatively small and focuses often on niche products where the company have a strong market position. But we have also seen examples where the market is being consolidated and where the new owners could help the acquired companies to take a new step in their own journey. Installation market is a market, for instance, where we've seen this. So the companies are usually bought at EV/EBIT multiples of 5 to 8 times, which is far below where the companies themselves are traded. And by repeating this, value can then continuously be created. So what drives growth? Well, the compounders in aggregate have grown sales by about 12% per year, on average since 2015, and EBITDA by about 18% per year. And this is clearly impressive. But what has driven this growth? Well, breaking it up, the main driver is M&A. So on average, M&A has accounted for about 70% of growth. But organic growth has also been quite good, 5% on average since 2015, and with an acceleration in the past year. So the strong business cycle and the bounce after the pandemic has driven a sharp acceleration in organic growth. So finally on valuation, over the past couple of years, we saw multiples expand significantly for the whole universe, which exacerbated the value creation I was talking about before. But we're now back at historical averages. Acquisitions are primarily paid with internally generated cash flow, and it's likely to assume that we will not see a deceleration in the numbers of acquisition. And this makes the space interesting again after the sharp deterioration we've seen in the past 6 months. So in summary, we think the business model for the group as a whole is robust, that M&A will continue, and that the 45% fall in the multiple in combination with the continuously rising earnings trend make the group as a whole interesting. Thank you.